Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes. Michael Saylor announces the Bitcoin Defense Department. Yes, that is actually 5 points of the MicroStrategy big boy, big idea play to secure your paper Bitcoin, because it's paper Bitcoin summer. If all of that seems like gobbledygook to you, stay on the line. We're going to talk about it on Bitcoin Season 2. Okay, we're back. It's Bitcoin Season 2 Writers Room. We are the screenwriters for Bitcoin Season 2. It feels like a movie. Last night was a movie. And this is the morning after. We're gonna talk about Michael Saylor's crazy post this week, Colin. Let's just jump right into it. So Michael Saylor on July 23rd, which is Wednesday, posted a picture. And this deviated from Michael Saylor's normal artificial intelligence driven ChatGPT looking like memes of himself. And this showed Michael Saylor MicroStrategy's 5 maybe pillars of TradFi Bitcoin games, and it arranged them in a pentagon. Sorry, well, a pentagram within a pentagon. What did you think when you saw this?
For those listening on audio, I was just acting like I was being possessed by a demon.
Eyes like crawling up the wall backwards, hanging on the chain from the ceiling. Yeah,
my head's going to start turning like the girl from Exorcist and spew green vomit. Yeah, I mean, I think the pentagram thing is kind of funny. Let's get this up here. Let's
get it up there.
So you have the original MicroStrategy, now Strategy, MSTR. You have the new preferred stock Stretch, really funny name, that we will be talking about here in a second. STRC. You have Stride, STRD. Striker. I'm at this point, I'm kind of getting lost in all of the acronyms and stock tickers. STRK. And then I would like to believe this one is Strife. I know it's not, but then you have STRF. So these are all preferred, Series A preferred stocks within the strategy universe, as opposed to Strategy's common stock, MSTR. Now, the TLDR for that is the common stock with MicroStrategy does not entitle shareholders to any dividends or payouts from the company, but these preferred stocks do. And Strategy, formerly MicroStrategy, has been issuing these new preferred stocks. I believe this year is when it started. I could be wrong about that. Maybe one of these started at the end of last year. But within the last year, Strategy has been kind of pivoting away from the convert strategy of issuing convertible notes, which is a form of debt that can be later converted into the company's stock by the note holder if that stock price is favorable, right? If the convertible note has a share price buy option of, for in MicroStrategy's case, this is just throwing it out there, like $100 per share. If the share is like $300, $400 per share, then obviously you're just going to convert that and then sell it to capture those gains or hold on to it. But the convertible notes basically act as kind of like a hybrid equity debt instrument, where if the stock price is below the strike price in the convertible note contract, then the company will have to pay back that debt. And if not, the debt gets converted to equity. This was MicroStrategy's bread and butter. It's how they amassed, there's now like 600,000 Bitcoin. The majority of those Bitcoin were purchased using this convertible note strategy. But recently, Strategy has shifted to a new strategy of issuing these preferred stock options. And there are now 4. The fourth one, Stretch, which was announced this week, has not been tapped yet. They have just announced their intent to do an IPO for it. But the rest of these have already been tapped, and they offer dividends anywhere from 8 to 10%. Now, you might be asking,
where does the yield come from, Colin?
Where does the yield come from? The yield comes from you, if you don't know where it comes from. No, I'm just kidding. But actually, kind of, yeah. In this case, this has kind of been one of the criticisms from Strategy using this new, tapping this form of fundraising. I'm going to get into some of the pros, but I will address the cons outright. I mean, Barron's put out an article this week that after the stretch offering, Strategy will be on the hook for 300 to 400 million in dividends per year on these stock offerings. Now,
does that start like next year or like this year?
So they're monthly is the thing. So yeah, so these pay out monthly. So they will be paying out monthly dividends. These are high yield too, right? So
yeah, this is great. This is great. This is a great deal for holders, assuming nothing breaks.
Assuming they don't also reprice the dividend, which they can do, and we'll get to that in a second. But they're anywhere from 8 to 10%. Treasuries right now are yielding 4%, right? If you're doing longer term ones, short term ones much less than that, somewhere in the ballpark of 3%. So you're getting outsized returns compared to other assets that you could park your capital in, or at least, quote, like risk-free assets like treasuries. This is definitely not a risk-free asset. It's been compared to treasuries because of the high yield, and people are going to use that as a benchmark. Obviously, it's completely on a different end of the risk curve compared to treasuries. But they do pay 8 to 10%. I believe the most recent one's 9 with Stretch. And so, but strategies are going to be on the hook for $300 to $400 million for these dividends, and these pay out monthly, be over the course of a year. That's like the rough math according to Barron's. They made $111 million in revenue from their core business in Q1. And that is just straight revenue. None of that is profit. So,
and that's been pretty flat. Michael Saylor says that's been like mostly consistent. It's just like not a growing business, which is the whole reason why he got orange pilled in 2020 and, has been on this Saylor arc.
Yeah. And clearly, like, it's one of the most talked about stocks, I feel like, and people either hate it, love
even
it,
outside of Bitcoin. It's like now it's like the story has crossed, it's jumped the shark.
Yeah, it's kind of it's in its own league in terms of
the Rubicon. My bad. The shark has
Well, the shark is in the Rubicon, and Michael Saylor is dressed up like Fonzie from Happy Days. That being said, if you don't understand the jump the shark reference, Google it. I'm not going to go into it here. Anyway, gross profit in Q1 was $77.1 million, which doesn't even cover MicroStrategy's payroll and SG&A costs, which came in at $92.4 million for the quarter. So like TLDR, they won't be able, unless they really turbocharge their revenue or they cut costs in their core business, they will not be able to service any of these dividends from the cash the business brings in, which is traditionally what you expect from a dividend yielding stock. Like they will pay dividends from their income to the stockholders. And that's, kind of the keep it simple, stupid case for holding a dividend bearing stock. I mean, that's what stocks were for. And originally, is like you buy the stock, you get a dividend. MicroStrategy won't be able to service any of these dividends from its revenue, though, at least as it stands currently. That could change, unlikely to change. So the only way they will be able to produce yield for these dividends is from further stock issuance and dilution, taking on debt, or selling Bitcoin, which Michael Saylor has emphatically said you should never do. Doesn't mean they won't do it. But
he has been asked this question directly a few times. He's directly been asked in public settings, will you sell your Bitcoin if, it comes to it? And he has very conspicuously said nothing directly answering that. He has very conspicuously said, given indirect answers about how one should never sell their Bitcoin, and no statements in response to this. Although looking at the requirements to keep this stock at the price it is, you would have to sell Bitcoin. So
I mean, at some point, maybe it depends on what Bitcoin's doing.
That's
and
true,
if they can continue to raise. I mean, that's why this whole thing, I think, is you're either on, to complicate the midwit meme, you're either on the left side of the curve saying like Bitcoin's always going to go up, or you're on the right side of the curve, high IQ, Bitcoin's always going to go up, so none of this matters. But like there is a situation in which Bitcoin might not go up, and it actually does start to matter whether or not they can raise capital to keep the machine running. And Saylor saying that he's never going to sell his Bitcoin kind of rings to me like Trump saying we're going to release the Epstein files. and then you get into office and then someone taps on your shoulder, or hey, hi, actually your name is in there, and now suddenly reality meets idealism, and you can compromise on a few things. This is not a political podcast, but have to.
Yeah, it is. It's just a matter of time till we
just need to find a way to get our name on the list of podcasts that talk about Epstein. Maybe that'll be beneficial for us in the future, or maybe a bullet will end up on my doorstep. Probably not.
When Bitcoin goes back into a bear market, we'll become like a big political history podcast.
We'll become like a limited hangouts,
exactly.
Unlimited hangouts.
Unlimited
Webb's.
No, we'll be limited hangouts.
But anyway, so to kind of just put a bow on this, one of the things I do want to talk about are some of the pros for why people think this is a better strategy. If you can service the dividends, then this actually is in some ways smarter than taking on the convertible debt, just because it de-risks any potential for you to have to sell Bitcoin or generate cash to pay off the debt. Because if Bitcoin were to draw down significantly and Strategy's share price took a hit, when those converts come due, and a lot of them are pretty far out into the future, so this is not the biggest concern and has been one of the bull cases for why the converts are smart. If Strategy's share price is below the convertible price, then they're going to have to pay back that debt. The only way they can pay back that debt is by selling Bitcoin. They're not going to be able to raise cash if Bitcoin's taking a hit. And if Bitcoin's taking a hit, their Bitcoin is worth less. They're going to, further put pressure on the Bitcoin price. You can kind of see a spiral narrative from something like that, right? So that is one pro, is that you kind of are de-risking your capital market strategy away from having too much of that convertible debt. The other pro would be that you are also tapping into potentially to a new investor a new investor profile that is looking for yield-bearing instruments. And I don't know, I can't say for sure. I haven't read any analysis on this. I don't think necessarily anyone would know for sure without having insider information. But I'd be curious to see what the investor mix has been for some of these preferred stocks, because maybe it is attracting new capital. I would imagine, though, that it's still pretty incestuous. It's like a lot of people who are already strategy fanboys. It's already people who are levered to the tits and all in on Bitcoin, things like that. So the TLDR, the pro is that you're de-risking away from debt-like instruments. The con is, where is the yield going to come from for these stocks? And that is where the primary criticism has come in for this strategy, both within and without, I would say, the Bitcoin ecosystem. There are some just perennial Bitcoin naysayers who are going to point to this and say this is terrible. But there are also some sharp analysts who are pretty Bitcoin bullish who are saying this too, that this kind of enters the Ponzi realm in a little bit, because the yield to pay out dividends is predicated on people coming in and buying more of the stock or issuing debt to MicroStrategy to pay that off. So I could be missing something. If you're listening to this, you're like, Colin's being a dumbass. Here's what you're missing. I just don't know where does the buck stop with these? At what point does strategy become too overstretched with these preferred stock offerings where they actually can't service the dividends? Because 400 million is not really anything to laugh at. Maybe you're laughing at it as strategy who raises $1 billion on a slow day on. I
think they just announced a $2 billion something other this week. So
maybe this is just all out the window, because they're going to, they'll do an at the market offering for the MicroStrategy stock, the MSTR stock. Maybe they do another convert, and if it's $1 billion, then you just bank that cash and you pay it off to the dividends as you go. Your stock price is rising because of the interest from buying the Bitcoin and Bitcoin going up. Again, all of this is 100% reliant on Bitcoin to continue to perform, which is really, I think, the kind of and I think this is where you get people on either side of the aisle saying this is a good or a bad thing, because the Bitcoin bulls are like, well, it's Bitcoin. Of course it's going to go up.
I say Bitcoin's going to go up, but it's going to go up tremendously. I sign on to this idea. I have been so ingrained to not lever up, beyond even a small amount. So this frightens me, because I see this being the primary top of funnel product for this modern era of Bitcoin onboarding is. And it's Paper Bitcoin Summer, which means that it's a meme for anyone who's on Twitter. Paper Bitcoin Summer. Everybody's leaning into it. It's hot boy summer, hot girl summer, Paper Bitcoin Summer. Break out your tiki cups and put on a suit and tie and put that on your Twitter profile and talk about these like Bitcoin Treasury companies. But we're sitting we do this, and I look at it like, you finally got all these people to finally buy Bitcoin with an asterisk. We got them to finally buy Bitcoin through their retirement accounts, but it's not even a Bitcoin ETF, which is probably a non-levered way to get exposure to Bitcoin. But now levered exposure. We were talking about this a couple episodes ago, Colin, where Michael Saylor may just be able to do the damn thing because they are the biggest company, and he is a step ahead in these TradFi games of all the other competitors. And we'll transition to talking about this is the major trend right now, is everybody's doing the Saylor thing. But he's multiple steps ahead in issuing these types of preferred stock. Unless you have a thought, I want to pull up some meme tweets.
I do have one thought on that, just to contextualize Strategy's position here, because I think that's an important point. They were doing this in 2020, and so they are the blue chip Bitcoin Treasury stock. That is, that they are the Apple, the Microsoft, the Google of this investing or equities cohort, right?
Yeah. How many other search engines have you heard of that are still around besides Google? I mean, that's a good comparison. They're the Google of search.
Yeah, and so there are network effects with that they're going to be the first one that is either, your financial advisor is not going to advise you to buy this, but if you're asking for exposure to one of these highly levered Bitcoin plays, Strategy is going to be the first one that comes to mind at this point for I would say 90+% of the investment community, at least those who are not trying to think outside of the box and look for outsized returns. And the other thing I would say is, in terms of playing the capital markets, they have been brilliant in exploiting asymmetries when no one else was. And I do think the preferred stock offerings are a way for them to try to find yet another niche in the capital markets, in capital markets to exploit, to raise more money. They have been very smart. People who are much smarter than I am about analyzing this have broken down why a lot of these instruments are more creative than not. And clearly they have been. I just think, though, you have to ask yourself, at what point does a company get too cute with its financial engineering that you end up risking being too levered and diluting too much and having too many liabilities on hand to where the train kind of gets out of control. I just would remind everyone that Strategy was one of the companies that blew up in the .com bubble. Saylor has been here before. Maybe he's learned from it, and he's certainly been much more successful this go around, right? The stock has been elevated way beyond what it was in the .com bubble and has stayed elevated and hasn't cratered. But my concern is just that there's going to be a point where the music stops for this strategy. And we're just kind of all waiting to see when that is and what causes the music to stop.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
I have some memeing tweets to pull up. First of all, if you remember the different stock tickers, Colin, they are STRF, STRC, STRK, STRD, which you can spell out in your head. And then another one would be, I think this is actually a really interesting tweet. I'm interested to get your thought on this, Colin. This is from Jeff Walton. I would say the poster child of MicroStrategy schemers and fanboys. He says, imagining a future where all equities are tokenized. That's not a crazy thing to say for crypto people. He says, would STRC then be a USDT and USDC killer? And I guess he means from like a yield standpoint, like the comparatively stable asset, which then spins off some yield. So
I don't understand this at all. I don't, and
maybe you're not far enough down the Jeff Walton, Hunter Jeff.
Well, I know who Jeff Walton is, but this to me, what do you mean USDT and USDC killer?
Well,
do you know what I mean? Like people are going to be using
you go to the store, buy a coffee with STRC. I think he's referring to like the interest bearing components of it, because you can hold like Tether or other stablecoin.
Yeah, I see.
And
But even that kind of doesn't make sense to me because Tether is soaking up that yield. They're the ones who hold the dollar instruments. That's not passed on to holders of the stable coins. So just the analogy doesn't make any sense.
You passed the test. You're sufficiently immune because this is the person on the other side of the trade. If you're short MicroStrategy, and they can stay retarded longer than you can stay solvent. Maybe we'll have to bleep that out, but you know what I mean.
Yeah, I mean, all love to Jeff. He's got some good content out there on these things, but I do think that's what's. This is taking. This is like the Teslaization of equities that we're seeing with strategy and the Bitcoin Treasury companies, and it's very a Bitcoinization thing in equities too. And I guess you would maybe argue that the Tesla is the Bitcoinization of equities first, but like these stocks are becoming a kind of, I don't want to say it's not culty, but it's a little culty. It's becoming a part of someone's like. But it's becoming like a religious identity for these people, or at least they are religiously attached to these.
We work in Bitcoin. I know,
but at least that's kind of cool. It's like I can memorize my wallet seed phrase, and I can escape the country I live in and still store my wealth. I can buy things allegedly on underground markets, allegedly on the alleged dark web. I can transact peer to peer without intermediaries. But I just can't get excited about stocks that are financial engine. Like stonks are just not going to get me out of bed, man. I'm not going to be like, you know what I'm going to do today? I'm going to die on this hill for Michael Saylor so he can buy another yacht and have parties in his mansion in Miami. It doesn't get the juices going.
See, I want Michael Saylor to buy my JPEG bags. Maybe if you frame it like that, then maybe we can be pro this. Okay, so let us review where this sits in the context of things. Unburdened by what has been. We're just going to look to what's happening right now, which is our boy Charles Edwards with Capriol Investments. He's a fun kind of OG, like on-chain and like analyst who blew up. You may remember him. Colin and I remember him from his hash rate ribbon days. That was a fun chart from back in the day, projecting Bitcoin hash rate squeeze moments. So he has just today on Thursday metrics tracking Bitcoin Treasury companies, and he posted some of these. Publicly, and they help give context for like why it seems like everyone is spinning up a Bitcoin Treasury. And the answer is it's not just in your head, it's true. Everyone is spinning up a Bitcoin Treasury just by sheer number of ones that exist. 2 years ago, there were like 10. And it was like, if one showed up every, few months, that would be significant. But something happened at the beginning of 2024 where we started to see an increasing amount of companies announce Bitcoin treasuries that really picked up at the beginning of this year, 2025, to where at the beginning of 2025, we saw a ballpark 100 companies announce a Bitcoin treasury strategy. And since then, we've climbed to about 145. And I don't see any reason why this doesn't stop. I mean, if you're looking at this is a parabola. So this is a classic parabolic advance of Bitcoin treasury companies. And then I think, he has several charts.
There are some interesting ones to zoom in on here. This second one, the treasury buyers per day, is kind of nuts.
Yeah, and this makes you very bullish. Like, okay,
does it?
Well, I mean, it makes you bullish maybe on the price of Bitcoin in the near term.
That's true. This hockey stick up though is making me a little nervous. Now, to be clear, like that. So if you're on video, the blue line is the number of companies per day that are purchasing Bitcoin as part of a treasury strategy. So it's like it peaks at like 3.5 companies and sometime in July or right before July, and it's kind of dipped, but like it just absolutely surges in 2025.
Yeah, we're seeing over the course of 2025, the number of treasury companies, which I guess the heuristic is, as he says, the average count of companies in the world that are buying Bitcoin each day. So in the past 6 weeks, this has taken off, and we have on average more than 3 companies making a Bitcoin purchase each day. And so these are your institutions, your institutional bid. We're also seeing, according to the next chart, that no one is selling. So again, if you're listening, we basically have over the past 4 to 5 years, the price of Bitcoin, and showing that generally Bitcoin treasury companies are buying little bits every other month or so, and maybe there's 1 month where they're selling. But in 2025, we're seeing a major change where companies are now buying tens of thousands of Bitcoin each month, sometimes peaking at 39,000 Bitcoin a month, and they're not selling it. So these are companies who are, at least to date, holders of Bitcoin, and they're buying it in size. This is the chart. We've talked about this kind of chart in previous episodes of Writer's Room, especially when we talked about the Bitcoin flow of who owns Bitcoin in a previous episode. This chart shows the total Bitcoin held by all institutions, including ETFs. And we are seeing that this tracks near perfectly with the price of Bitcoin since 2024. So whether it's causation or correlation, the Bitcoin treasury companies appear to be the primary drivers of bidding Bitcoin up. Now, that's
I would caveat that ETFs and treasury companies.
ETFs,
Yeah, because it says ETFs hold 1.295 million Bitcoin as of this chart's posting. Treasury companies hold 885,922 Bitcoin. And in total, all these entities own hold 2.18 million Bitcoin. That's 10% of the Bitcoin supply, as Charles mentions in the next tweet.
Yeah, and if you remember from the report we reviewed a couple months ago on like Bitcoin flows, there was kind of like the striking one-liner, which is we saw Bitcoin attributed to individual users decline by 500,000, and Bitcoin attributed to ownership by institutions increased by 500,000. It was a direct one-to-one outflow inflow. Of course, that was for 2024. I bet you that would be more so once we get the data for 2025. So going on to the next chart. Here's a crazy one. Institutional holdings are $250 billion. That's $250 billion USD that are held at institutions. Okay, here's the one you were referencing, which is institutional holdings by market cap. The total percentage of Bitcoin supply held by institutions has breached 10% for the first time ever. That is up from 4% 18 months ago. So, this is just a percentage of Bitcoin supply, which is held by your institutions.
So this is institutional buying per day. And the chart shows the daily percentage of all Bitcoin in existence that is being acquired by institutions per day in blue. And that is currently 10 times higher than the Bitcoin mining supply growth rate in red. And he says, notice how every time institutional buying has exceeded the supply growth rate, price went vertical. So, I mean, this is like, this classic supply and demand. This is basically the stock to flow argument. These institutions are hoovering up more Bitcoin than are mined per day. And as you can see in this screenshot, if you are on video, at the end of 2025, when Bitcoin, surges to $100,000, you can see this blue band just go absolutely vertical. And, kind of basically furnishing that run right during and after the election.
He says, Charles Edwards says, strap in. So I'm strapping in, Charles.
Strap in.
Strap in.
Not strap on.
Yeah. Maybe that too.
Bad joke.
Yeah. And then we have another chart. Okay. There were two more charts I expected. He has an institutional buying per day according to Coinbase. We have back in 2024 that initial pulse from like 20,000 up to like 60 something thousand. Like you remember that was like the first shot across the bow that the bear market is over. Then we had another one big right before 2025, end of 24, and then one which has been over the course of the spring. And each of these kind of like pulses where Bitcoin gets boring, and then kind of shoots upward over the course of like a few weeks. These are coincided, likely driven by the institutional buying as a percentage of Coinbase volume. It's wild to see. I do love a good bullish chart. I do wonder where all of the cypherpunks have gone. Have they retired? As Udi Wertheimer says, have they all sold? Are we now the suit coiners in the driver's seat?
I think that's it. They're still there, but as Bitcoin has grown and more people have come to hold it and use it, it makes total sense to me that in the same way that you had the earlier pioneers of the internet who were like running servers in their home, self-hosting their own email, that they got drowned out by consumer-friendly applications. The same thing is happening to Bitcoin and will continue to happen.
Yeah.
People really don't care about censorship-resistant, permissionless money. They care about making money. And that's what we're seeing with the paper Bitcoin summer and with these treasury companies. I mean, at the end of the day, the dollar rules all. And if you can show people how they can make money from something, they're going to find that much more useful than some of the other benefits that it provides, right? Especially, I think, here in the US, it's really hard to convince someone why something like Bitcoin is important because they haven't had to deal with capital controls. They haven't had to deal with sanctions. They haven't had to deal with all of these things that can make the financial system impossible to use. And until you're in that situation, Bitcoin's properties, at least the most interesting properties, are not going to be relevant.
Yeah. Perhaps this is the beginning of the eternal September. Maybe this is that moment, takeoff moment where maybe the early users of the internet began to be drowned out by the teeming masses who finally got access because of Netscape and AOL, basically distributing access to the internet. Now, I would argue at that time, eternal September meant that more people could use the internet. They're still using the internet. Whereas I would say paper Bitcoin summer instead of eternal September. Maybe paper Bitcoin summer is a little bit distinguished because I would say they're they don't really not using Bitcoin.
That's a really good...
I'll probably get those words shoved down my gullet somewhere down the road.
No, I think that's
using it as a pristine capital asset.
Yeah. I mean, someone will say that, and it's a good distinction. To Steelman, the other side, though, I would say, I think one of the other analogies here would be ownership, whereas the early internet was kind of predicated on ownership of user. Well, it wasn't. There's a lot of things, but ownership of user data. was a huge part of it, right? And now that almost categorically does not exist for most of the things that people use. You know, you don't host your own email. You don't actually own your email account. And that goes on down the line for almost everything we use on the internet. But to your point, you are still using the protocol. You're using the rails that the internet relies on. And with Bitcoin held in a Fidelity or BlackRock account, you're getting price exposure with none of the benefits of actually holding the asset. You know, it's like, imagine if every time you wanted to send an email or query something, you had to go to the library or go to
yeah. What is this, 1998?
Yeah, or what was it? Kinko's? Wasn't that the printing shop?
Yeah, Kinko's merged with like UPS or something. Anyway, yeah, FedEx. I think FedEx bought Kinko's. So mergers are in our future. So which conglomerate's going to buy your paper Bitcoin stock? We will answer that someday in the future. Otherwise, thank you for listening to Bitcoin Season 2. Make sure to like and subscribe. Catch us on the internet, preferably X at CBSpears, at AsALayHodling, and follow the show at BTCSZN2. Thank you all very much. Bye-bye. Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes.